Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking at 1:30 p.m. on Midcap Radar. Midcaps fall harder than large caps amid a broad sell-off in equities as investors stay away from riskier assets worldwide. 9 stocks in the red for 1 in the green, even as the market recovers slightly. The Midcap index is down close to about 2.5% and down 10% from its 52-week high.
ONGC and Oil India slip with Brent crude trading below $86 a barrel mark. This after oil crashes to nearly an 8-month low as fears of demand destruction and a surging dollar impact sentiment, even as OPEC Plus says it may curb output to steady prices.
Harsha Engineering builds on listing gains after a strong D Street debut. The stock lists at a 35% premium to its issue price. The management tells CNBC-TV18 the company will exceed industry growth this financial year and also expand their margins.
With the global energy crisis hurting the chemical industry in Europe, Mingmani Organics management tells CNBC-TV18 overall demand is low in Europe, even as the company is confident of maintaining its EBITDA margins.
Well, first up, let's just take a quick check on the markets. There has been an intraday recovery. Early in the morning, the Nifty had dipped below that 17,000 mark. It went below its 200-day moving average. But as you can see right now, there has been a near 100-point recovery from the day's low. In the last 15 minutes, what we've seen is that markets sell off. So that rise that we saw from the lows has seen a bit of a sell-off. So the rally has faltered a tad bit. Talking about the big stocks and in terms of the recovery, it's the IT stocks which are recovering. So the Nifty IT index earlier today hit a 52-week low. Since then, the Nifty IT index recovered close to about 1%. And it's still holding on to that 1% up move. Names like Infosys, Emphasis, HCL Tech Persistent are showing you gains of close to about 1 to 2%. On the losing side, it's many of the stocks with global linkages. So Tata Motors is down 5.5%. One, it gets a lot of revenues from the European region where there are fears of a recession, plus the pound is depreciated. The sterling is at a fresh, life low against the dollar. So all that's hurting Tata Motors. But even others like Hindalco, Tata Steel, again, companies with global linkages are weak.
Oh yes, and we'll speak to one of the companies which does have that global linkage. But as Reema is pointing out, there is some recovery. It has been sold into, and the IT pack is really pushing for the bulls today. But it's a good time to get a technical check on the markets as well. Let's welcome Himanshu Gupta of Globe Capital for just that. Himanshu, good afternoon. Thanks a lot for joining us. Well, the recovery has quickly been sold into. What are the charts suggesting? Is there more pain ahead?
Hi, good afternoon to you. Well, I think from an intraday perspective, the markets look too oversold. And I think a decent short covering, not only for today, but for days to come cannot be ruled out from the current levels. So if you talk about Nifty, I think 17,000 has been held today despite a weaker cues in the opening trade. I think one can initiate longs around 17,050 odd levels for a kind of pullback trade towards 17,250, 17,300 odd levels, keeping a stop loss below 16,950 for today. But if you ask me from a short-term perspective, have we hit a bottom? I think it will be too early to say. And I think the chart still suggests that we might retest that 16,850, 16,800 levels before we call it a bottom, as far as Nifty is concerned. As far as Nifty Bank is concerned, again, a smart recovery. 38,500 put writers actually managed to defend that levels. And we have seen a decent recovery around 39,000, where again call writers have actually led to control this kind of pullback. And again, we saw some kind of shorting from those levels. So I think Nifty Bank again 39,000, 39,200 remains an immediate area of resistance. And on the downside, I think 38,200, 38,300 are the levels that can be tested here as well. But having said that, both of the indices look very oversold in the short term, and fresh shorting at these levels do not offer an attractive risk reward ratio.
A minor rebound then from oversold levels, but we're not out of the woods when it comes to perhaps a little longer term outlook. What about stocks?
So stock specific, I have a long and a short idea. Asian Paints, a big beneficiary of the decline in the crude oil prices. And on the charts also, we have seen a good strength in the Asian Paints charts today. So I think Asian Paints is a buy around current levels for a target price of 35.40. And even if the markets actually manage to hold these levels, I think 3600 kind of targets can also be seen here in the immediate near term. Would recommend a stop loss below 34.20 for Asian Paints. Second one is a short on Bandhan Bank. I think the charts are looking on the verge of a breakdown here. And if we see a breakdown below 216 Bandhan Bank today's session, we might see another 5 to 6% quick decline in this stock. So Bandhan Bank is a short with a stop loss above 267 for a target price of 250.
Okay, all right, Himanshu. Thanks a lot for joining us and taking us through your technical picks. That's all about markets, but let's get stock specific now. Samvardhana Motherson has announced first acquisition in Japan. Company will acquire mirror business of Ichigo Industries in Japan. We have Lakshman Sehgal, who's the vice chairman of the company, joining us now to discuss this and the outlook going ahead. And we also have Sonia, who will be joining us to take this conversation forward. Mr. Sehgal, good afternoon. Thanks a lot for joining us. First up, the main question, of course, what are the synergy benefits that you're seeing from this acquisition? A new market for you. What kind of benefits do you see here?
Good afternoon. Thank you very much. It's a very important acquisition for Motherson. Actually gives us our first manufacturing footprint in Japan. Of course, as we all know, the Japanese car makers are very important. Not only do they have a large presence in Japan, they make about 7 million cars, but also outside globally, they make more than 17 million cars. So this will enable us to supply them in the home market in Japan, and as well, of course, offer our products to their production vehicles globally in a much bigger way. So we see a lot of synergies here. We see a lot of opportunities to increase our penetration in the Japanese car OEMs, and as well use the technologies that they have, for example, an actuator, power fold, which are useful in the mirrors for us to diversify our offerings globally to all our customers.
Laksh, hi, good afternoon. Thanks for joining us. So you said that they may globally provide mirrors for 70 million cars. Can you tell us what is the market share currently of Ichigo and what kind of growth do you see for the business? How can it sort of contribute to your own top line?
No, I said Japanese car makers make a lot of cars outside of Japan. So that, sorry, I have to correct you there. But Ichigo, of course, is a relatively small player in Japan. They are quite aligned to only a smaller number of car makers in Japan. But the most important thing is that they have a physical footprint in Japan, which is very important if you want to supply the Japanese car makers. So using those facilities there in Japan, in China, and of course our facilities which we have globally, we're really able to support their programs on a global basis and be able to give the customers new offerings on technologies which we were not able to do before because of this competition or because we didn't have a physical footprint in Japan.
So what is the market share currently that they enjoy?
It's a small market share in Japan. I think the more important thing is with Motherson's market share at 25% of the rearview mirror market, I think that's where we'll really be able to show growth in the coming years.
Okay, in terms of margins, you know, the company, I understand, has around 8% margins currently, and pre-COVID, the margins were around 10%, right? So given your own backward integration capabilities, what is the margin expansion that you can expect over the next 2 to 3 years?
Of course, we are looking at ways to improve the profitability. I think we have to understand that this company is a carve-out. It was sold to another company, and now we have bought this from there. So their core business was not mirrors. So definitely, we do see an opportunity for ourselves to improve the margins over here. But it's a EPS accretive acquisition, and of course using the synergies of Motherson and a global supply base and all the technologies and patents that we hold to supplement their offerings to the car makers, I think we will be able to sell more advanced mirrors and of course be able to increase all the parameters. But we focus on ROS, so we're going to try to get this to a 40% ROS as soon as possible.
So this is a fairly small acquisition, but you also mentioned in the release that you intend to acquire the mirror business of Ichigo Industries in Thailand and Malaysia as well, a net asset value of 29 million yen. Can you give us a breakup of this entity? What is the revenue, the EBITDA, the key customers, and how do you plan to grow?
Again, this is focused on the Japanese car makers, but this is again a smaller entity that's only doing a bit of trading, etc. I think the bigger opportunity here again is for Motherson to use these opportunities of the entries that they have made and set up manufacturing bases or support from our existing bases that we have in Thailand, that we have in India, that we have in China for these new markets where they're already supporting the car makers. So it's relatively small, but I think the most important thing is to have the relationship with the car makers, is the most important step in increasing a business. Once you are inside, once you're supporting a program, then for the future programs, you can much more easily expand the business than trying to win it from scratch. So I think that's the important thing. That's going to be step 2, because this is relatively smaller entities that will be transferred. But more importantly, we'll get access to those programs which we were not on before.
Okay. And what is the ROCE profile, since your company focuses on the ROCE more than any other ratio of this acquired entity? What is the ROCE profile currently?
Look, like I said, everything will depend on where the working capital sector is very close. So all those adjustments still have to be made. But like I said, it'll be a EPS accretive transaction. We're buying it at 4.1 times the EBITDA of 2021, and it's at JPY 5.2 billion. I'm sure we'll come to you with those numbers once we close and we have the final numbers.
Okay. This is the third acquisition that you've made under the Vision Systems business division as part of your 5-year plan. The earlier 2 were in Turkey and China. Any more acquisitions over the next 12 months that you'll be looking at, and what is the war chest that you've outlined for the same?
Sonia, it took us, almost 12 years to do the first acquisition in SMR, and now they've done 3 in the span of 1 year. So finally, things are getting moving. So of course, we don't count out more acquisitions won't happen. Definitely for our 2025 target, there has to be some acquisitions, some large ones as well. We're working quite closely with our customers and car makers on it. As you can imagine, there's a crazy world out there right now with a lot of opportunities. So, I'm sure more things will come and we'll be presenting it on your show as soon as they happen.
Okay. Just one final question before we let you go then. Since you are with us, how is the situation currently? Because Europe has been under a lot of pressure. There's a massive energy crisis playing out there. Demand is, under pressure across both Europe and North America now. But how is the demand on the ground according to you? And do you see any headwinds to earnings in the next few quarters?
Yeah, so it is a strange world at the moment. I think from our side, on the demand side, demand is strong. And that's also because of what's happened the last few years. The semiconductor issue is still having a hangover across Europe. It's supposed to have been solved. It has not been. Working capitals are all increased because of the shortage of components. We are seeing the energy crisis, which you have rightfully, stated. So I think it's an interesting time. It's a difficult time, but at the same time, we have demand which is quite strong for passenger vehicles, people's preference for personal mobility, new launches of the car makers. So it's kind of a mixed bag. Thanks to Motherson being so diversified with our target of 3CX15, where no country, component, or customer should be more than 15% of our business. We've been trying to mitigate a lot of those risks and have pockets of growth. So on the ground, there is a mixed result of things that are happening. But the hope is that in Q3 and Q4, things kind of smoothen out and we come back to a normal situation. But overall, Motherson is having a very healthy balance sheet and able to grow, as you can see, even in these tough times.
Okay, all right, Mr. Sehgal, it was a pleasure speaking with you. Thank you so much for joining us and outlining the focus that you have on this acquisition and the newer markets as well. Good luck to you for your future acquisition plans as well. Well, that's the word coming in from Samvardhan Motherson. But with that, we will slip into a short break now. We have a lot to catch up on the other side of this very short break. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18 and ahead of the all-important RBI policy later this week. Let's hear out what Amitabh Chaudhary, the MD and CEO of Axis Bank, had to say on festive demand, rate hike expectations and a lot more.
We have to understand that the new world will have some kind of instability because of the various factors which are involved. I think it's that volatility is, we have to accept it as a given. In that scenario, I think India does look like an island of prosperity. I'm not saying India is an island, but it looks like an island of prosperity. Yes, a lot of people are looking forward to this festive season coming up, which has already started, and the evidence which we are seeing, especially for the right products, right brands, is huge. I think Indian consumer is looking for that right value proposition, and if it is offered to them, they grab it. So I do expect that in the festive season things will pick up. Obviously, the rural and the semi-urban demand is a bit muted. Hopefully, this will help revive the demand and take it forward. RBI has been taking steps to control inflation also. And that balancing act of getting the inflation right, getting the demand, growth to come in, I'm quite sure the government and RBI, the combination will get it right finally. So.
One final question, sir. We've seen 140 BPS rate hike so far. The expectation, your expectation from Friday, the MPC will begin its deliberations on Wednesday, announce a decision on Friday. Your expectation, and how do you think the RBI can best perhaps do a balancing act, that the one you were referring to?
I should not be speaking on behalf of the regulator or the Monetary Policy Committee, but all of us do expect some kind of rate hike. The issue is how much. I think if you look at all the market commentary, it is somewhere between 35 to 50 basis points. RBI has to look at what the other central banks around the world are doing and what impact it is having on the interest rates and currency and so on and so forth. I'm sure they will be deliberating through this over the next couple of days. So my view is somewhere between 35 to 50 basis points. I think it's not the end of the hike cycle. I think there could be a couple more hikes depending on how inflation plays out. Let's wait and watch, because at the same time RBI has been quite clear that they do want to ensure that the growth is not impacted in a big way, but they have to get inflation down because they are under monetary policy is required to maintain inflation within a certain zone, and they have to work towards getting it there.
That's Axis Bank saying on Friday we could see a 25 to 50 basis points rate hike from the RBI, but that's not going to be the end of the road. When it comes to rate hikes, we will see more in the future as well. But RBI is going to keep the growth of the Indian economy in mind. But the other big story globally is the big plunge that we've seen in crude prices. Crude prices are now hovering around $85 per barrel. This has big implications for the Indian economy. So hear out what Revenue Secretary Tarun Bajaj had to say on the crude price fall and what it means for the revision of the windfall gains tax.
तो फर्स्ट का तो है 30th को या फर्स्ट को आने तो दो डेटा, अगर कम होगा तो कर देंगे, कर तो रहे हैं. Our credibility is in the fact that we have reduced the taxes whenever the prices have gone down.
Okay, the other revision in fall taxes to come in soon because of the fall in crude prices as well. But with that, we'll slip into a break. But before we do that, here's some great news for investors. You can now track your...
Welcome back. This is our favorite Midcap Spotlight segment. Sonal is going to be talking about Gujarat Fluorochemicals. They held some management meet. What were the key takeaways?
They did. The stock is not doing so well, but it has been an outperformer this year, right? So the takeaways were quite positive. The stock is down just 1.5% in a very weak market. They said that post FY25, significant opportunity will come in for the company, the battery chemical segment. And they are planning to commercialize first battery chemical segment in the next 2 quarters itself, which could be a big trigger for the company. They are aspiring to double their revenues in next 3 years itself, with margin band between 30 to 35% for the company. They are also planning to put up a blending facility. They are into fluorochemicals. So one of their chemicals, that is R410A, in the Middle East immediately. So that could be other expansion and growth prospect for the company. It expects to invest 2,500 crore rupees for next 2 years, 4,000 to 600 crore rupees over FY25 and FY27 as well. The biggest issue for the company was them providing guarantees of around 1,800 crore rupees for debt raised by fellow subsidiaries, something like an Inox Wind, and that is the reason why the street was worried. However, the company anticipates it to expire by March 2023, and that is a big comment coming in from the management. On the back of which IIFL Securities says that related party transaction has been a big overhang, and now that there is some clarity on this, this could potentially re-rate the multiple of the stock further. ICICI Securities has raised EPS estimates by 2 to 10%. They've also raised the target price to 4,270, which compares with current market price of 3650 rupees per share. So positive commentary, and especially on the related party transaction bit, Reema.
Okay, so they're guiding for about a 17% upside in the stock price from current levels. The management saying revenues will double in the next 3 years and margins will be maintained between 30 to 35%. With that, we're out of time on Midcap Radar. Your stocks when we return.